I remember that one time when I made my investment based on my emotions and I didn't really do my research, and eventually I ended up making a bad decision where I invested my money in something I didn't really understood. Now when I'm thinking about that decision, I should have been more logical and I should have done my research and really understand what I'm investing in. And that's why in this video I want to share 5 rules for successful stock investing with you. These rules have helped me along the way to make smart and logical decisions when it comes to investing, but they have also helped me to understand what kind of investor I am. And I left the most valuable rule to the end of this video. So if you're ready to take your investing game to the next level, make sure you watch this video to the very end. Alright, rule number 1. Never invest based on emotions. So let me know if this sounds familiar. You find out that a lot of people invest in certain stock, for example, and you start to think maybe I should do it too. And without any research and without any understanding, you just invest your money in there. Well, now that investment was totally made based on your emotions. And I have learned the hard way that investing based on emotions is not a strategy. Your feelings shouldn't be your strategy because actually you just end up doing impulsive decisions that are not logical. When you're investing based on your emotions, the thing that actually controls your decision making is how you're feeling at that moment. So if you start feeling, for example, that stock could be a potential option to invest in, you probably won't second guess that for too long. And a great example is that if you see the price of that stock goes up a little bit, that's extremely easy reason to jump in before the stock price goes up even more. So emotions are the enemies of smart investing. Focus on logical decisions and do your research. Rule number 2, invest for the long term. Time in the market beats timing the market. When you invest for the long term, you can be confident in the market no matter what. When you're investing for the long term, you don't care about market crashes. It's also the best way to find out what kind of strategy works for you. Let's say you try to constantly make quick profits, so you invest in crypto, for example. And you may end up making some quick profits over short term, but even worse is when you lose your money over short term. So in general, it's much better to try different strategies over long term and find out what kind of investor you are. Personally, when I started investing, I thought I tried to find out some kind of strategy where I can make a bit of money in the short term. However, I quite quickly realized that it's much better to stay consistent and invest long term. First off, it reduces your stress levels and you don't have to be, doing research all the time and watching how the market behaves. When you're investing consistently over time, you can be confident that you're buying during good times and during bad times. The most important thing to understand about this rule is that wealth builds over consistency and compounding, not quick flips. Rule number 3, don't buy what you don't understand. How I like to think about this rule: if you can't explain it, don't invest in it. I have definitely made this mistake in the past, and you know what? Those investments are still not doing good. So before you invest in something, make sure you understand what kind of investment it is. So whether you're investing in crypto, stocks, or whatever it is, make sure you understand what their business is about. The easiest way to buy something you don't understand is when you see other people doing that. So instead of sticking to your own strategy, you're just going with the hype. The thing here to understand is that you should avoid hype. I understand the perspective of fear of missing out, but when it comes to investing, are you really ready to invest your money in something you don't know and lose it? Versus doing your research and being confident about your investments. It's much better to do your own research and stick to your strategy instead of going with the hype and doing what other people do. Rule number 4, have a strategy and stick to it. There's tons of strategies you can use as an investor. I prefer a long-term investing strategy where I just buy and hold, but I'm also looking for potential opportunities, whether it's investing in stocks or crypto. That allows me to stay more active when it comes to investing. And I'm not only, sticking to my boring long-term investing strategy. And the most important thing to understand about your investment strategy is that it's your game plan that you will use to get to the results you want to. So it doesn't matter what other people are doing. It doesn't matter where they're investing their money. You focus on your own journey and you stick to your plan no matter what. So for example, whether you're investing in value, growth, or dividend stocks, consistency wins over chasing trends. When you're sticking to your plan, you know that you're in control of your investments. However, if you allow yourself to slip away and do emotional decisions based on what others do, that can lead to bad investments, but I think that's a lesson everyone should learn hard way. And it's totally understandable that creating a strategy can be a bit difficult and you don't know what to do, especially if you're a beginner. But first off, you have to identify what you're aiming for when you start investing. That's the first thing when it comes to strategy. What's your ultimate goal? That will immediately help you to structure a proper investment plan. And later on, you can always change it a bit and see what works for you. Rule number 5, when the market crashes, stay calm. So what you really have to understand is that panic is not a plan. When a market crashes, or let's say a market goes down a bit, it's natural to start to think that, oh shit, I'm losing my money. And even though I've made some investing mistakes in my past, thankfully this is something I've been able to stick to. Let's take an example here. So let's say some stocks in your portfolio go down. The first thought you get is that, oh shit, I'm losing my money. Maybe I should sell them while they're still profitable. That's the worst way to approach this situation, because eventually you'll end up making emotional decisions and you just panic sell your stocks. Instead, when this kind of thing happens, that market goes down, you should think about it as an opportunity. Crashes are normal, they happen. Now that some stocks have come down a bit, you can look at this as an opportunity to get some potential returns in the long term. So whenever a market crashes, I definitely prioritize investing more money in funds because of their diversification. Now, those were the 5 rules for successful stock investing you should stick to. And I promise you, if you take advantage of these and you focus on these steps, it's going to be easier to invest. You're going to feel more confident when you're doing your investments. And most importantly, you're going to avoid bad investing mistakes. If you made it to the end, I highly appreciate you. And speaking about investing mistakes, make sure to watch this video next. It is about 4 common investing mistakes. If you're new to the channel, click here to subscribe because I release new videos every Sunday. Thank you guys so much for watching, and I'll see you in the next one.